So good morning, welcome back to this presentation. My name is Joan. I'm your host for this. Okay, so I want just to do a very simple, quick presentation of some of the patterns you look for when you're trading nasdaq. Okay, so we've agreed earlier that the most important thing when you're trading nasdaq is support and resistance. When we're talking about support and resistance, we're talking about dynamic support and resistance, and also the demand and supply zones. Okay, now we all know that there are three parts, there are three states of the market. We know there is a trending market, and we know there is a ranging market, and we know we have a channeling market. I may not be able to teach you all those ranging stuff and blah 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 but I've shared I think I've shared a course that teaches those breaches, those the different states of the market. Because if you're a trader, the first thing when you do when you get in the market is to have a bias. Okay, the first thing that you do when you get into the market is to have a bias. Okay, I mean, just know what is the state of the market as per now. I'm trading, but I don't know what is the bias, what is the trend bias, what is the current state of the market. First of all, understand the current state of the market. Okay, we have three states of the market. We have the ranging state, we have the trending state, and we have the channeling state. In my case, I only trade two states of the market: a ranging state and a trending state. Those are the only two scenarios in the states of the market that I trade. Alright, and that is what I'm going to show you in a simple, quick presentation here. So the first thing you must understand the structure of the market. Okay, the structure of the market. Now, when you look at the chart that I'm looking at right now, we can see clearly here this is a range, and this is 1 hour time frame, but I only enter trades on 15 minutes. Here's the thing: when you are trading indices, and this is my opinion, you don't have to believe my opinion, always try to trade using the lower time frames, because when you're trading indices, we have bigger moves as compared to the forex currencies. I mean, we've got a lot of moves, very big moves with indices, and if you trade on a higher time frame and you have a smaller balance, I'm telling you the drawdown will take you out. But 15 minutes you will have a sniper entry, and you will have a smaller drawdown as compared to trading on a higher time frame. Okay, so here's the thing: this is the channeling, this is the ranging market right here. Okay, so the first thing when you see a ranging market, I compare this ranging market with consolidation. Okay, and we all know that consolidation is one of the things that gives us an edge in trading, because we know that the market is about to do something. There's a reason why the market is consolidating, it's correcting, it is grabbing orders. Okay, so if you always put that back in your mind, that whenever I see a consolidation, there is something cooking behind the scenes. Okay, and it is your goal and your mission to wait. You can trade the ranging market very effectively using support and resistance. Okay, what I mean by that is, now right here we are in a ranging market. If I draw a zone here, and fill this zone, like that. Okay, I filled. Now here's the thing: when you're drawing support and resistance, you must understand that you cannot draw support and resistance in a single line. Even when you put a single line as support, you must be able to know that that is a zone. Okay, that is a zone. You must be able to know that the market can break up to somewhere either above or below, because you cannot draw a single line. How are you going to draw support and resistance in a single line? It does not make sense. Yes, you can draw with a single line, but back in your mind you know that that is a zone. Okay, just like here you can see that is a support zone, and as I can well draw a resistance zone here. Right now, if you extend this like that, you will see that it has been respected elsewhere. And if you go back to history, you'll see that it has been respected even elsewhere. Okay, and this market is ranging in this in between these two zones. Okay, but initially it will break this zone, right? So when you're trading so that is it's very simple when you understand. Okay, so what I normally do, you can trade. There's nothing really to teach people how to trade the range. Okay, what I can perhaps teach you about the range, first of all, draw your zones like that, and then go to a lower time frame. Okay, when you go to a lower time frame, like if you go to 15 minutes, you'll see that those zone now when you do that, you can be able to trade. You know very well that right after the market has hit the upper support and resistance, so the upper area of the zone, it will come crashing down all the way down to the next zone. However, sometimes it will not come to this area here. And what you do when you're trading the zone, because the market has hit the upper area, what you do now, you wait for what we call breaches. Okay, and the breaches is pretty simple. You have a bias. You know that this market has retraced off the upper key area of the range, so you know that the market will come all the way down here. So what you do, you wait for consolidation within the movement. I mean, you see this movement here from the upper zone here to down here. You wait for consolidation in between. The final destination is somewhere down there or close to there. Okay, so but what you look for, because you understand price action, you look for something like this. Market come crashing down like that, and then we create what we call a transition. Now this is a transition to confuse people. So you know very well that you're trading this transition. You're trading this with a bias to the downside. So after the transition here, or sometimes it will initiate a breakdown. So that is your trade right there. Break to the downside. Wait for another transition. Okay, and trade to the downside as well. Sometimes the market will come crashing down like this, like he has done here, and then it will come back here. Now this is the best setup. Remember, you're trading the range, but inside the range you're looking, because sometimes you cannot be 100% sure, because we trade probability and there's no holy grail. You just you just trade the highest probability trades. Okay, so sometimes the market will look like that. So you have created an area of interest here, and you are biased to the downside. You know that this is a ranging market, but I'm not trading until I see this rejection of the upper zone or rejection of the lower zone, and I'm waiting for a transition before the market proceeds down. So this transition here, right after the break here, that is when now you enter a trade, like you can see here. Okay, the market came crashing down. Let me reduce the size, the font of this thing. So like you can see here, the market came crashing down all the way and then went up like that. Now this is your area of interest. You know that you're trading. Remember, now you would drill these zones on 1 hour chart, but you're trading on 15 minutes. So right when the market breaks this zone, and you can see this one actually consolidated in this before initial breaking. Right after the break of that zone, now that is where you enter a trade. And I'm telling you, this is super perfect. Your stop loss should be the guy who started it. You know, the person who started this movement down is this guy here. Okay, this guy here is the person who started that movement down. And so right after the break, remember, you're biased to the downside. Right after the break of this, your stop loss is there. Okay, we don't care about stop losses. We always say that if the market comes back to your stop loss, that was not the right setup, and you should take your stop loss. Don't say that your stop loss is too close, because that is what will give you an edge. I mean, because it will pay out very nicely when you have your trade. That is a trade right there when you're trading the range. I mean, it is better than trading just, the market is down there, you just enter a trade and forget. I mean, that is how I trade. Because here I have confirmed there's this consolidation here, and I'm biased to the downside. Okay, this is what I call transition. This is a transition. Okay, the person who started this move is resting here. Okay, you see all this momentum. You see the momentum here is very strong, but the person maybe was on a journey. He lost something, he lost some energy, and now he's resting. Probably taking a mango juice to regain the energy and proceed. So this is, I always look for these transitions. Actually, if you can be able to be looking for transitions in the market, the resting places, the places of confusion, because now here there were people who were trading, who were buying this trade. Okay, but because we only focus to we know where we are, we know where we are heading, we don't have to waste a lot of time here. Okay, you just need to wait for this transition to break. Okay, to break and resume the actual move, and that is how you trade a range. Now look at this, and always, if you draw a zone like this, always take trades that are from the zones. Okay, look like this. Look here. So look at this. The move started from this zone. Okay, now you can trade it, but to be more effective, look for transition. Okay, look for transition. So if you look carefully here, the move, so there's a gap here. This is probably the start of a new day, but it is picking from the last move. So you're biased to go all the way up to this zone here, but along the way look for a transition, look for a consolidation. You can trade based on the zones, but to be more better, have better entries and to have better trades, look for transitions along the way. Okay, Now when I look at this market, I see a transition here. When I look at this market, I see a transition here. You see, this is a resting phase. I mean, the person was running from here, and he ran for 1 kilometer, and now he's resting. Okay, but he's again picked up the momentum. He's picked up the strength. He had the strength. Maybe he took some energy drink or something. He's picked up the momentum now. He's resting again. So this resting phases is what you're looking for. But you don't just look for resting phases or the transitions when you don't have a bias of the direction. You must have the bias of the direction before you even think of trading these phases. Remember, this is a ranging market. Okay, we already have a bias of the direction because we know the ranges. The market will move from point A to point B again and again and again and again before initially breaking those 2 points. Okay, now let's go to look at this. This is another area here. Okay, now this is challenging for some people, but to have better entries, look for transitions. We are biased, we know this is another level here that the market will retrace, and we biased in our direction. We know the market will come all the way to here. Okay, we don't know whether it will break this area, but initially we know it will either break the upper zone or the lower zone. Either way, that is mandatory, and that is why ranging and consolidations are the best, because we know, you see, even this consolidation here, you see here, we know that the market will initially break these zones. Okay, and whether you like it or not, it will always break these zones. Okay, and that is why ranges and consolidations gives us the best edge in trading, because we always know that something will happen. Something will happen. Now look at this. I was telling you, now look at this. We know we are biased that the market will come all the way to this zone. We cannot be sure that it will break this zone to the back, to the outside like that, or it will come crashing turn again and go back again like that. We cannot be sure, but there are things we can do to have a better probability of knowing whether it will break to the outside or to the downside. Now you look for this transition. Because you are biased to the upside, you look for this transition, and because we know the market will always come to that level, now this is your trade. The break of that transition, the break of that consolidation, you look at the momentum and the speed. You have to rest. After a big move, the market need more guys. This is even in the BTMM. After a big move, the market will need more guys. Now look, the people who were selling here, they got screwed and they ran away. Okay, they got screwed and they ran away. And therefore, since the market needs to have more people on the radar, they will create these resting phases to grab orders to make sure that people get in. Okay, before initially proceeding with the move. And now most people will think, yes, this is it, the momentum is over, and the market will come crashing down like that. So there are still sellers here. The people who sold here and they got screwed, some of them ran away, and we have new sellers here, because you see this market came down with a very big momentum up today. Before initially, you see this candle here, that is a panic candle to so many people who were buying, and the people who were selling, they were this is it, man, let's get in the market consolidation to make sure get more people in there. Okay, it's a simple way, you don't have to complicate things. I mean, and if you study the what we call breaches and ranges. I'm telling you, of the market structure, you will understand that this happens over and over. Okay, so if you look here, after this consolidation here, all this resting phase here, the market proceeded to this area here, and you know this is a strong support and resistance. This is a strong zone, as you can see here. This is a very strong zone. So if you're scalping now, here is another area you made a lot of money, because scalping, you just get in and out very quickly. You don't hold trades for too long. Okay, so that is a simple way how you trade a range. I mean, and I will put a lot of example in the section for the VIP, the people who get the course. I will put a VIP section to give you as many examples on live trades on ranges, okay, on how I personally trade ranges. Right, so let me get back to what I'm telling you. That is range. That is one of the things that I trade. Also the trend. Okay, now the trend is the most beautiful thing to trade, but you must understand that the market only trends 50% of the time. Market does not trend always. It will always trend 40% to 50% of the time. But what you do is the market structure to try and determine places where you can take an effective trade. Okay, so let me do a quick demonstration here. So assume this is the market structure. Okay, I'm drawing like a nursery school kid. Okay, okay, now this is one characteristic of an uptrend. This is one characteristic of an uptrend. Sorry, my screen marker is misbehaving. Okay, so I have to start again. This is one characteristic of an uptrend. Okay, so what you do when you come to the market, first of all, identify that you have these characteristics. Remember, the market ranges or trends only some percentage of time. It does not trend always, so you not always trade the trend. Sometimes you'll find the market in a crazy range, I mean, in for a long period of time. Sometimes you'll find the market in a crazy trending state, and when you find the market in a crazy trending state, now that is your day, that is your month, because you will pocket a lot of cash. And this is where now you use things like moving average, the 250 moving 50 and 200 to scale your trades, because they work very perfect in drawing the dynamic support and resistance. So when you see a trending market, it will create these high highs, yeah, and these lower highs. Okay, now how there are two ways you can trade this. The first thing you do is to use the Fibonacci retracements. Okay, and always only take the trades that are in conference with the Fibonacci retracement levels. Now, when the market is trending, it creates what we call dynamic support and resistance. The market creates what we call dynamic support and resistance. To identify dynamic support and resistance, you have to use a trend line, or you have to use a moving average. Okay, I prefer using a trend line. Okay, now you take your Fibonacci Now you must have like 2 confirmation, but before even you have the confirmation, you can trade this, the break of this area. That is where you buy light out of after the break. And remember the breaks with the nasdaq, they are more better than the breaks with the currencies, because with the currencies there's a lot of manipulation. With nasdaq, not so many people trade nasdaq, I mean, so they don't have a lot of orders to manipulate. But for the currencies, don't try to trade breaks unless you have a retest, I mean. But for nasdaq or other indices like dex, you can trade the break. So this area here is where you use the so you can always trade the breaches, and the break is here of the previous, or the previous high. But you can always also trade this these areas here. You put, so you draw your moving average, you take your Fibo, you put at point A and B, and the Fibo will give you point C. Now your point C must be the golden ratio, the 61.8, 50, all the 38, those 3. I mean, you can take a trade. Now for you to take a trade, so when you see your A and you have your B and you're waiting for a Fibo to give you C, make sure on your C you have something like a small consolidation. I mean, that will give you better trades. A small consolidation before initially taking off. Your take profit will be just close before the next or the previous high, which is now to be broken. Because the reason why you take your profit before the market comes to this point here, you don't know if the market will do this. You don't know if the market will do this and come to that level there and drop down like that. You don't know for sure. You don't know. That is why you take your profit there. Then after the break, you can proceed with the move or wait for a retest. So most of the time you will see the market breaking the high here, breaking the high there, and then retesting the same high, consolidating along that area, and then taking off. I mean, this is a trade that you can take with a lot of confidence, especially with plastic. So what I'm showing you here, you should not try these with currencies. There's a lot of manipulation in currencies, and that is why the most basic strategies for currencies that don't work in currencies, they work in nasdaq, okay, and indices, because there's a lot of manipulation on currencies, and you have to concentrate a lot before you take a trade on currencies. But when you're trading nasdaq, you don't have to have a lot of concentration. I mean, you just have to follow the same thing every day, every time, every day, every time. So even when you can trade the breaches alone. Now if I show you, so when you see something like this, the market is coming, let me draw properly. The market is coming up like that, and then creates a higher high here. This is a setup that I trade, and then the market comes down, comes back up like that, is unable to take this here, but it creates a low here. Now remember, you're on an uptrend. If you take your dynamic support and resistance, you are on an uptrend. Okay, now this move has been unable to take out the previous high, okay, and it has created a low here, okay, and Now your trade is after the break of this. Now you will have a perfect trade if you trade the break of this high, because now this has been unable to take out that high. So you take your trade right here, like that would be a perfect trade. There will be a perfect trade, and most of the time this here will be a retest to the trend line, or what I call dynamic support and resistance. This will be there. So you can take 2 trades out of this setup, because initially what will happen, it will come for another retest to this area that has been broken, come down like that to the same level here, and the market will resume the initial trend, okay, creating this W formation here. So you have an opportunity to take trades, 2 trades. One, not actually, this is the first trade and the retest trade, okay, and then you can trade the W to resume the biggest move. The reason why is because this here is a trap, okay. Very many people trading this in the lower time frame will be thinking, this is now a downtrend, but because you're trading on high or doing analysis on 15 minutes or the 1 hour chart, you'll be able to see clearly that market is on an uptrend. This zone here most of the time will be the 61.8 Fibo retracement level. So if we can see, if we get an example here, so let me see if I can get an example for this. So now you can see this is an example of that. We're in an uptrend like it, and the market is doing exactly what I've showed you. So this is the most previous high here, and the market come crashing down like that. Let me reduce the font. So this is the high here, the market come crashing down, created a small transition there, and this transition does not make real sense, but you can trade the break of that transition. But the market comes shit. So you can see this high here is what I'm interested in. I was unable to take out his high there. So, and if you put something like a zone here, something like a zone, and extend like that, you will see that is a retest of a previous break, here. Okay, it is a retest of the previous break, and he was unable to take this. You also put a Fibo retracement level. You will see that it is exactly at the 61.8 Fibo retracement level. Okay, so I hope my English is good. I hope I'm able to explain. I hope you guys can get me clearly. Okay. So so initially, you know, the trend is up, and the real movement will resume soon. And as you can see, the market has created what I was telling you, the W formation here, and then assumed the overall the overall trend here. Okay, so this was the first W here, okay, which breached this area. It was still unable to take out this high, okay, and then came crashing down again and take up the momentum. So you can see this is what we call multi-session W formation. Now this is one now. You might consider going to 15 minutes, check there as well. Okay, so if I may, so here is another example. Here you see the market here is on an uptrend. The market here is on an uptrend like this. Okay, if I may draw that trend line like that, let me undo this. So if I can draw that trend line, you will see the market is on an uptrend like that. So the market has created a high there, okay, and the second move here, this small move here is unable to take out that previous high, and it has breached to the downside. Now this is the first trade here after the breach of this area here, as you confirm that this has been unable to take out the previous high. So this is your first trade here, and you can take your profit at the next support and resistance area, which is somewhere there. You can take your trade profit there, and your entry is light after the breach of that. Remember that you were on an uptrend. Okay, this is your first trade, and as I've told you, your second trade will be a retest of either support and resistance. Now in this case, we would have expected this trade to retest that area there before continuing downwards, but it turns up to happen on the next support and resistance. So it has come to retest the next support and resistance, which is there. Okay. Now this is a scenario where the market has changed the direction completely and is going to another consolidation here or arranging market here. But we can try and see if we can get one more example. And this is a double top, so not the best example I'm looking for. Okay, here's another example here. Right, this is the highest point, and the second retracement here, which is this, was unable to take out that trade. So this is where now you take a trade from the breach of that area there, and your take profit will be the next support and resistance level here. Okay, here this is also an example where the market has taken a complete change in direction. Okay, a complete change in direction. Now this is now the craziest market I know. When you see a market in these conditions, this is when now you trade support and resistance, because this market will always bounce off those resistance levels. Okay, so I can see, so that is it. I think if I've not explained Well, I think some of you have my contacts. You can contact me, you can email me, you can basically ask for any help, you can ask for any question, you can ask for arrive trading workshop for 2 days or 3 days. You can ask for team viewer session if you didn't understand, because I don't think my English is the best, but I will always try to make sure that you understand what I look for when trading Nasdaq. Okay, so thank you for joining me. See you in the other videos.